Good morning, ladies and gentlemen. Thank you guys once again for tuning in for another pre-market watch list. Sorry about getting on a little bit late here today, but again, it is Monday morning. The whole world's probably moving a little bit slow today. So any hooser, thank you guys again for tuning in, and we're going to get taking a look at a few stocks here today. To be honest, I have really zero great expectations for today. I'm really not a fan of pretty much in the market right now. Haven't had a lot of time to actually look at much today, so it's probably a little bit of a contributing factor. I haven't really done too much research today, but really just a couple things I want to point out. Pretty much everything you guys already know. Good morning, William. How's it going? So last week we talked about CGC, and we're like, yeah, this looks like it's getting towards a good buy around the $25 level. It did continue a little bit lower. And that's all right. But if you look at CGC now and you look at the news surrounding CGC, all of a sudden CGC is becoming a buy. Everything you've heard for the past couple weeks on cannabis has been that it's bad and the cannabis stocks are losing momentum and they're all going down. And oh my God. And now that CGC comes down towards a good technical buying point and the stock has been, kind of beaten down, all of a sudden the script is flipping to CGC is a good buy, and now we're giving it buy ratings of 31, and this person is upgraded to a buy from a neutral, and this and that. So we're starting to see that sector shift in momentum in terms of news. So we've already seen the negative news come. Now that sector shifting into positive news as the sector is a little bit cheaper. So I'm assuming we're going to start seeing CGC pick up in momentum to the upside. So we're going to be starting to look at getting into some swing trades here on that, most likely. Good morning. Good morning. Yeah, so if you look, we'll take a look at CGC. Let me get into sharing the screen here. So yeah, CGC went a little lower Friday, but again, not surprising when President Trump comes out and blah, blah, blah. You get the point. Kind of just annihilates everything. So you can see yesterday or Friday, it started off with some good buying momentum, then it got pushed down, got bought up later in the afternoon. We've gapped up today, and we're above kind of the 24 mark, which was also another support. So I say it's probably time just to start watching CGC long bias. I mean, there's really not much more to say to it. We've been trailing down, broke down a little bit more, getting bought up. We even have a slight curl here pre-market. So I would say this is most likely going to have a long move out of the gates from this appearance as of right now. But anyways, yeah, so CGC down at a good buy point. I think this is something that we should probably start be focusing for a bounce swing trade on. I think it's very possible that's what's going to happen. So I'm probably going to start looking into that one today. All right, so that's kind of like the pretty much only play I really had any interest of discussing with you guys today. Take a look at MGI. Surely. So it's penny stock, $3. Been on a nice couple moves, couple days. This day it gave back all of its gains, so that shows weakness a little bit. Yep, I'd be more on the sell side of MGI right now. Wouldn't be a buyer, be more of a seller. Then again, this is a little interesting. Hold on. Heavy volume, sells off, grinds back up and over the 200. This actually it's a little bit more interesting because this was once upon a time not a penny stock. Now it is a penny stock, but the way it's moving a little bit different. I'd still be more of a seller right now because we're up towards a previous high, which usually means we're not going to break that previous high top on first attempt, so we're most likely going to pull back a little bit. So you'll probably see the price of MGI get a little bit cheaper from here. It is MoneyGram. Yeah, I'd probably be more of a seller in the short term. Probably be selling around this $4 area, personally. You'll most likely see it top out around this $4, $3.90, $3.80, pull back, and then that's just it. We're in a sell location for MGI. How do you scan for the best stocks? Well, here's the thing is best stocks, again, so even myself, we made YouTube videos about how I scan for the best stocks, but in reality, that's such a vague way of saying it because the best stocks is really all personal preference anyway. So what do you determine? What is the best stock for you? Is the best stock for you a penny stock? Is the best stock for you a large cap stock? Is the best stock for you the one that's gone parabolic over the past couple of days and now you're looking to short it? Is the best stock something that's double bottoming and now you're looking for to get on like a long swing trade? So again, scanning for the best stocks is all relative to the person or individual themselves based on what it is they actually like to trade. So you'd have to determine what it is you're most likely interested in doing and or trading, and then that can point you in the right direction of how you might want to be scanning or stocks you'd be interested at looking at. BIOS, any thoughts? I want to say it's a really cheap stock. Let's take a look. Fairly cheap. It's been trending pretty nicely. Again, I'd probably be more of a seller on this stock than I would be a buyer because you're coming right up into the previous sell location, right? So whenever I say this, I mean, this is the seller's location. That's the sell, and then down here was the buy. So when you look at it like that, it becomes pretty evident. That's your sell location. This was your buy location on there. So for me on the BIOS, again, I'd be more of a seller, more distinctly a seller like right here off like some of this top action right there, like 360 to 380 area. Yeah, BYND, sure. I would remain short by. I would remain long-term short bias on BYND. I can see it's curling today. I mean, the way you look at it is if you get over like 156.67, you'll have a short squeeze that runs into resistance here at 162.98. But for the time being, I would probably just remain short bias. You can see it's still kind of resuming, staying on this trend down. I would just remain long-term short bias. If this keeps getting pushed down, and then gets below 144, you're going to have another big down day like that, right? If this keeps getting pushed down, here it's going to snap and have another long day to the downside. But anyways, I mean, yeah, I would just be long-term short bias. This stock you'll most likely see BYND down to prices of $90 within the next couple months. Right here, or sorry, to $100. It's going to fill this gap. You can see this gap here at 101 to like 120. It's going to fill that. So you're going to see the price of BYND probably down to it's like $100, fairly soon, relatively soon. How do you think like rookie penny stock traders to make money trading penny stocks? I don't really understand that question, to be completely honest. I think the SPY is going to stay in a range from 288 to I think 282. Basically, it's yeah. Let me pull up on the chart. I don't really see the SPY. I mean, I don't really care what it does today, but the formation's definitely bearish for sure. I mean, this whole thing's bearish now. Now that we have not broken over that level and we kind of slammed down, again, like I said, it's over, under. Over is long, under short, and then Trump tweeted that put a whole wrench and everything. But if you look at the 4-hour chart, I mean, I just don't really expect the SPY to really push over 288. I don't think the market's getting over the pre-market high or below this after-hour low today. I think we're basically just going to stay in this trading range from here to here until the range gets tighter and we either wedge out, right? We create a wedge that either leads to a breakdown or we create more of a bullish wedge that leads back up to this level here at 288, whatever, and then breaks up. That's basically it. It's over 288 is a long, under short. I think this is going to become a new intermediate macro top right there. Yeah, so AMD, basically AMD is moving very similar to the market, which is same for many stocks today. I mean, honestly, for me, I don't think CGC to buy. I think CGC is actually a long-term sell now. And I'll show you why. Daily, month, monthly. That's it right there. I think CG's or I think AMD is a long-term sell. To be honest, I mean, there might be a little bit more up, but I just don't see it. I think it's long-term sell. If you look at the 20-year chart, I mean, again, history tends to repeat itself. 48 was its all-time high, came back to 41, close to the all-time high, sold off. We came all the way back up. 36, 35, close to, again, the all-time high. Now we're starting to sell off. So, if you just follow history, it's at a sell point, not a buy point. And then, granted, I'll say there's more volume now, right? You can see here there's way more volume than there ever was before. So, again, everything can be a little different. But, I mean, again, history does tend to repeat itself. And based on the way it's looking, it's not looking strong. Right? If you look at this chart here on the RSI, it already has, well, arguable. I mean, yeah, there kind of was. Oh, wow. Excuse me. Yeah, so even from like this top here to that top, right, momentum actually kind of died down a little bit. But that's probably not the best one to pay attention to. But look at this one. From this high to that high, there's a upward move. And from this high to this high, there's a downward move. So there's already a bearish divergence taking place on AMD. So in the big picture, I would say AMD is more of a long-term sell and a long-term short for the time being. Silver is good. Actually, there's Pete and John Nigerian who are on CNBC every once in a while. And anyways, Pete and John Nigerian, pretty good options traders. Pretty much do all their options trading off of scanning for unusual options activity within the market, and they have found unusual options activity in the silver market right now, and on a few different silver plays. So based on that, we might be seeing silver move, pretty bullishly, maybe a little bit. I don't know if it's bearish or bullish. I'm just going to go with bullish because the charts are all bullish. But yeah, they're seeing unusual options activity in the silvers market, but it's not like we didn't tell everybody, weeks and months and years ago that silver and gold would be picking up. It took a while, but it's here. They're moving. So yeah, silver I would stay bullish on for right now. Actually, silver's in a situation where it could very easily go into a big squeeze. I think we see silver towards 20 in a couple months. I mean that's a pretty big price target to call out, but with the way the chart's formed, I think 2019 is a very obtainable price target on silver right now. On SLV I'm thinking of, but silver in general. Random facts. Again, on FinViz, scanning is all about what you're particular looking for. There is no one scan fits all. But yeah, you could simply go on FinViz right now and scan stocks trading above 1 million shares of volume with a relative volume of 2 and whatever price you would like them to be. If you scan for stocks over $10 with a relative volume of 2 and over, let's just say 2 million shares on average traded a day, that is you scanning for stocks that people are actively looking at with the relative, because if the relative volume's 2, then people are actively playing with them, and if the volume's over 2 million, then people are actively trading them. So now you're going to be onto stocks that people are actually trading and that actually have volume every day, which means they're probably moving. Does that tell you if they're going to be a good long play? No. Does it tell you if they're going to be a good short play? No, nothing. But it tells you that they're actively moving stocks. But again, you have to know what it is you're really focusing on for trading. Yep, I do own, I believe, yeah, I own gold and silver mining stocks, yes. Wow, there's a lot. Yeah. Yeah, just kind of looking at some stuff. How about Uber? Honestly, I don't really pay attention to Uber very often. It's been a while since I looked at them. I'll do some research on them. Pretty much all large cap stocks I really wasn't interested in. Roku has a slight gap up. I really wasn't interested in that. Things change. Sure, things change. I mean, here's another thing you guys can keep an eye on. I mean, you got a lot of. I mean, people are like looking at RKDA right now. I mean, I'm not crazy about it. Some people are following that. Was it TRNX, and people are watching this. That was a reverse split. I wouldn't watch that, but some people are. Well, Page only, when it comes to penny stocks too, you have to understand when a penny stock, so to answer your question, I'll rephrase, how does candlestick behavior, price action, psychology differ from penny stocks to mid, large cap, and ETF traders? So, best way I can put it is when you take a really low price stock, it means more people can afford them, right? So the likelihood that everybody in the United States in their house could have a ramen noodle dinner right now is very, very likely in comparison to everybody in the United States being able to have a steak and lobster dinner tonight. So we know that more people could probably have the ramen noodle dinner because it's just far more affordable, right? So when you come to the penny stock, you come to the stock market, and you take a stock that's only a couple bucks, you now just made it far more acquirable. It can be acquired by far more people, right? Because it's way more affordable, more people can afford it, so more people buy it. So now you take this really cheap stock and you put affordability to it. Now it's going to attract a bunch of people that haven't been involved in the market for that often because they're solely looking at affordability. Right, that's their whole thing right there. When you first get into the market and you want to make some money, you're looking at shares, you're looking at what you can afford, right? So you're bringing this affordability aspect, which attracts new traders. New traders don't know as much. People who don't know as much don't trade correctly, so to speak. So again, you take a bunch of new fish, right, and put them in a pond and try and have them do a bunch of tricks and a bunch of jumps, which yet they don't even know how to do themselves. So again, with cheaper priced penny stocks, you're going to attract a lot of new traders that don't know, all the information about stocks. They may not know all the patterns. They may not know all the formations, and not everybody can know everything. But I'm just saying you're getting a lot of newer, inexperienced traders trying to trade. So if you ever wondered why you might see a penny stock move very vigorously and really awkwardly, it can also be partly due to the fact that the people trading them don't actually know what they're doing. So you might just be seeing random buys and random sells at random times that don't really make much sense to you. That's part of it. But generally all stocks move similar. It's just penny stocks are usually going to be a little bit more volatile than some of your large cap stocks because they have a lower supply. So again, penny stocks and large caps are definitely different, but it's usually primarily based on their characteristics, which is, this one just has a low supply and this one has a bigger supply. So when you mix in demand, this may move, not as viciously or as fast as a penny stock is going to, right? So if something is not moving as fast as a penny stock or a large cap is not moving as fast as a penny stock, then, the emotional or psychological aspect of it would be, well, if this thing's moving really fast and my heart rate's going to be up, I might be a little bit more on edge. And as soon as it goes up, I might be willing to sell. So we're going to have aggressive candles that go like that a little bit more maybe than we will on Apple because Apple's going to be a little bit heavier traded and it has more supply. So, I can't really pinpoint how the behavior is exactly different. It's really just something you need to experience for yourself. But at the end of the day, all stocks pretty much trade the same. Penny stocks, large cap, they're all pretty much the same at the end of the day. ENPH isn't yeah, ENPH is that stock is about $30. I like it long. If it's the one that's 30, ENPH I like it long. It's great trending stock with great volume. I've been waiting to buy it. I've just been waiting for a dip. Yeah, so my personal stock market index is always AMD, Facebook, Netflix, Nvidia, Apple. Those are pretty much my mains that I focus on every single day. All the big names. And part of that's just because they're so heavily traded and there's usually a decent amount of volume and the range is really good. But it's always your big tech names for the most part. So Facebook, Apple, Nvidia, AMD, Netflix, Tesla's on there, Baba, and then like earnings plays, I will always trade like Johnson & Johnson, Salesforce. Then all your like really big names, I'll trade on earnings. I won't trade them regularly because their beta is just too low, so it doesn't make it really fun to trade. So the only time I'll ever trade any other big names outside of the tech names or like big computer chip names will be pretty much all big names, but only on earnings days because that's where their volatility tends to be really high, which makes it a little bit easier to make money, or a couple days after their earnings. Like I won't trade Home Depot. I'll never trade Starbucks. Right, I don't trade Salesforce. I don't trade, I never trade Shopify or I never trade Spot. But on earnings days, I will trade those in like a couple days after earnings. Penny stocks I'll trade here and there only when they're really good. That's just it. So it's either off earnings, big main tech, main chip, and penny stocks. Wow, there's just so many questions. I will not have the time to do them all. Guitar guy, yes, I do have a video about setting up a scanner on Thinkorswim. Yes. No, I wouldn't say BYND moves like a penny stock at all. I do like Roku as a stock in general. Oh yeah, I forgot Roku. I always keep Roku on watch too. Do I ever take a break if you feel tired or overslept? Yeah, I'm not really sure what you mean by that, Cooley. Like, do I stop working? No, not really. Dominic, yes and no. The Fibonacci's working. You just got to keep playing with it. I mean, I can't really say yes or no to that. It's really just you needing to practice over and over and over, and then your eye will just start to pick it up. That's really just it. You just do it over and over. Yeah, this looks like a time where it could work. You put it on. If it is respecting, then you can trade. If it's not, it's not. But again, as I said, futures and Forex, you'll find that Fibonacci tends to work a little better. Generally, I always trade. I usually am pretty much always trading because there's always a play that I can make or find to make. Like, even if I don't really like the way the market's turning out for the day, doesn't even matter, right? Like right now, I have no clue. To be honest with you guys, I have zero idea of what I'm trading intraday today. I have no idea. I like a few things. Actually, really, I don't like much. That's the thing is I really don't like anything, so I'm not really focusing on anything for the time being. The only thing I'm really looking at is CGC, and that's for like a swing trade. So in terms of actively trading today, there's really nothing that I'm actually too concerned about trading. But I know that Netflix has a 10-point range in the day, and if I find a bottom, then I can scalp a bottom for 1-2 points, 300-400 shares. I got a $400 day under my belt like that. So, yeah. So if there's nothing I ever truly like on the day, then I'll just look for scalp trades on stocks intraday off their levels, which becomes pretty easy to do anyways. No, I have no pet gerbils. Yep, I still have NSP. NSP, I only have like 4 shares of it or 3 shares of it, so it's not like it's detrimental to my account that it's going down. So yeah, still holding. There's really no point in me taking NSP off until it breaks below previous low. So I've been trading for a while. Why don't you start to trade bigger and scale up? It's all personal preference how you trade. The more shares you take, the more money you make and the more you lose. It's really the same thing. It's really the same thing. If you trade 400 shares, right, and then you make $400 or $800 or whatever it may be, and then you lose, right? Whatever you win, it's the same. It's literally a mirror effect to your loss, right? So if you trade with 10,000 shares and you make $100,000, right? Then you're going to take 10,000 shares and you're going to lose $75,000, right? So really, it's almost literally the same. It's just depending on how much money you make. So what I'm getting at is the more shares you go up, the more of a psychological effect it has, right? And then next thing you know, you're taking more shares and you think less logical, you think more emotional. So it's all really just personal preference. I mean, I trade with enough shares right now and do enough shares that I can make it a decent amount of money. So again, all personal preference, just it. Or I'm not some screeching multimillionaire either. I'm not super mega rich. So, I still have to trade responsible, right? It's not like every single day is a guaranteed win. And it's not like I can guarantee that, I can do this over the course of my whole lifetime and guarantee that I'm going to make wins every single day and even year in, year out, right? If I start to up my size, I can make dramatic losses that I might feel that I'm fighting to win back over the course of a whole year. Do I really want to do that? Not really. So again, it's really just knowing yourself, right? You are the biggest battle in this game, and the more that you know yourself and the better you know yourself, the better you'll be able to cope with your own trading style, right? So with that being said, I got to run, got to get back to our private group. I do appreciate you guys tuning in for the day, and we'll see you. We'll see you tomorrow morning. All right, guys, everybody, take care.